to welcome you to another show. That is the closing bell for week ending 23rd of August 2013. First of all, let me apologize to my premium members who've been waiting for me at 5:15 this evening. Due to some unknown circumstances, I was not able to get to my computers. As such, I have to do this recorded closing bell, which I prefer to do it live to show you what's actually happening in the market. But having said that, let's look at the market as it is. So we do know that this week was the worst sell-off for the year, and we're almost down 4% from where we were last Friday at 1790. We just had a bit of recovery today, though the market, cash market was up to about 1724. It closes about 1729. It went as high as 1729. So having said that, if you look at the chart, let me just show you here. It's not that a tail of a good sign. You do still have weakness here. Let me just refresh this. You still have weakness in the background. You could see market could not rally to close above the 1730. Instead, the market closes lower, just slightly up at 0.74%. So that's still pointing a lot more weakness to the downside. Now, just want to put things in perspective. Ever since we broke through the 1770. Now remember, last week, looking back at my notes, which is dated 16th of August, I did mention the main support at 1775 must hold this level here. 1775, this level must hold. If it doesn't hold, which means you have what we call a breaking of the ice to this line here that you see, and that means the market is like rolling over. So the 1775 must hold, if else it will roll over, and that's what the market break down since then. Uh, Again, the news of the QE tapering is still on again. There is a lot of consensus as well as disagreement whether QE will be on. On one point, the QE has started the ball rolling, so we will see whether the first week of September we will announce the QE. As more news is coming up, we are seeing there are signs of recovery in terms of the job numbers coming out from US. They may want to taper up the QE rather than printing 85 billion a month. They may is looking at the quantity. How much are they going to taper off? Because remember, Ben Bernanke next year will retire as his second term as the US FOMC federal chairman ends. So there's news that whether he will be replaced by Janet Yellen or Summers, which is contending for the job. Now, all these will still depend on what's going to be happening between the Obama administration. All right. So let's look at the next thing I have here is the FBM 70. As you can see, FBM 70, similar story in here. We do have the roll off, which is the breaking of the 14,200 level in there. As you could see, this to me is just a temporary stop on a downtrend. You all heard about the new news about the biggest outflow that we have. I'm going to show you the foreign funds flow after that we experienced last week. That what uh, tell us about this sell-off in here. Okay, so the second box is going through the sell, but there are still some stock going up. Now we are at the junction where prior to the general election 13, around 1700 level in here. So the next level we are talking the support will be somewhere around 1690, 1680. Now make no mistake, we are still in a downtrend. In any absence of a very bad sell-off, the market would rally, and we want to see whether it can roll back to 1730 in here 1740. The sell-off has begun, which is a stage 4. We haven't seen any signs of accumulation yet. Now if I switch this to a weekly chart, you can see much better in here. That's what I mean in here. This is a spring, so this should not happen. Let me just refresh this again. Right, you could see the volume. I don't know why, for some reason I'm trying to clear the computer cage here, but that's a tall tail sign that we would see subsequently another week of selling for week 2 and week 3, because typically we do have 3 or 4 weeks for the selling to taper off a bit and to see subsequently whether there are some support coming in from the either local institutional or foreign institution. Definitely foreign institution has been selling, and this is at the market high in here. So we are talking about fund flowing back to US and flowing back to Europe for that matter, and they are leaving this region here, especially what has happened in India and Indonesia because of the high current deficits account. All right. Now, next thing I want to do is to look at the foreign funds flow in here that I will show you. So you could see here foreign funds. Let me just scroll up a bit here. That's where we have this tapering off. All right. Some more here. uh, I'm just trying to get this at the right smooth. Just bear with me. There you go. So you can see more lowering of the accumulated volume in here, and also the 5-day rolling average has already gone to minus 2.5 billion, and as well as you could see this blue line which represent the daily foreign funds. So they has been net sellers ever since July. Every day is selling. But at the one point in time, they were just buying. So what has happened is the local institutional has been really coming in to support this market, but they can only do so much. So once the foreign funds want to sell, they could sell heavily in there because they don't care whatever the price is. The whole point is to repatriate the money back to the US and European country. No matter whether it's good stock or bad stock, they're just going to move out from there.